So we are discussing accounting standard 4, contingencies and events occurring after the balance sheet date. So first thing we need to understand what is a contingency. Contingency is a situation or a condition, the ultimate outcome of which, either a gain or a loss, which is determined only on the occurrence or non-occurrence of a future uncertain event, not in the control of the enterprise. It can be anything which I don't have control. These things are called contingencies, and a contingency may give you a income or a loss. A loss means you currently have a liability. And income means you may have a contingent asset. Let's see example of a contingent liability. Like we run a business, one of our customer is not happy with the service. He made a case on the company. And if I lose the case, I will incur a loss. So that is a current liability for me. But is it existing liability? No. It depends on the judgment given by the court. Do I have any control on the judgment? Again, so this is called as a contingent liability. Likewise, there can be an asset. Like I put a case on someone else. If the judgment is in my favor, it's an asset or an income. But as of now, it is not known. So this is a contingent asset and a liability. How to deal with these contingent assets and liabilities, and also events which occur after the balance sheet date. So, in India, the balance sheet date generally will be, the period will be 1st April, say 2023 to 31st March 2020. This is going to be the period of financial statements. Okay. But for this period, when will you prepare the financial statements? The due date for conducting your AGM will be 30th September 2024. So assuming on this date, the board of directors have accepted the financial statements, or board of directors accepted the financial statements, for example. So there is a 6 months gap between these two transactions. So if any event happened after the balance sheet date but before signing, how to deal with these things in the financial statements? The accounting standard 4 talks about these things. How to handle these transactions is given in this particular standard. So these events are classified into, these events after the balance sheet have been classified into two types: adjusting events and non-adjusting events. As the name suggests, if it is an adjusting event, you will adjust the balance sheet. If the event is a non-adjusting event, you don't touch the balance sheet. So the examples are, let me read out. Adjusting events are those which provide further evidence of a condition that existed at the balance sheet date. So there is an event existed on the balance sheet which further gave rise to an adjusting event. For example, there is a person, Mr. X. He is not paying me my receivables. Like he is my customer, he is not paying me my money. And I think he may not pay. So what I have done, I have created provision for doubtful debts. I think he may not pay. So I created provision for doubtful debts. After 2 months, he became bankrupt, and now I know I am not going to receive the money. So as on balance sheet date, this is already existing. There is a reason to believe that he will not pay, and now he become bankrupt, so he will not pay. So this became an adjusting event. So I will go back and change my balance sheet. So I will recognize this as a loss in my balance sheet. So it is an adjusting event. Whereas a non-adjusting event, these are indicative of the events which come subsequent to the balance sheet. The example for this is an earthquake happened on say 30th of April. My balance sheet date is 31st March. An earthquake happened on 30th of April and I destroyed my factory. Do I need to change my financial statements to give effect of this earthquake? The answer is no, because it is a non-adjusting event. I don't know that the earthquake will happen. So it happened after the balance sheet date, so I am not going to change my balance sheet because of this particular transaction. But yes, if it is a big event and it destroyed a substantial part of the factory and is going to impact my going concern, which is a fundamental accounting assumption, I am going to disclose the fact whether going concern is affected or not. Otherwise, it is going to be just a non-adjusting event. So let's see a couple of examples based on this. I am going to read a question for you. In a company X Limited, theft of cash of rupees 5 lakhs by the cashier in January 21 was detected only in May. The accounts were approved by the board of directors after detecting the fraud. So they are saying theft happened on say 1st January 2024. You have prepared balance sheet on 31st March 24. On this date, you don't know about the theft. But on 30th May, you got to know about the theft. So, whether you are going to give effect of this theft in the balance sheet or not is the question. So, to answer this, you need to again go back to the definition of an adjusting and non-adjusting event. As the definition says, those adjusting events are those which provide further evidence of a condition that existed on the balance sheet date. So theft was there on balance sheet date just as you don't know. So the same condition has given rise to the knowing of the theft in May. So it is going to be an adjusting event for you. So you need to recognize the loss due to theft in your balance sheet if it is found before signing the financial statements by the approving authority. So generally, who approves these financial statements? In case of a company, board of directors will approve the financial statements. So till the time this board of directors approve the financial statements and adjusting events, you can adjust in the balance sheet itself. You don't need to give it in the next year. Okay. So I would like to give a view of what can be an adjusting event and what is not an adjusting event. One, bankruptcy of customer on whom you already given a provision, on whom we created provision. Second, theft known before signing. Anything else where you have a event or a transaction happened before balance sheet date and known only after the balance sheet. And what is non-adjusting events? Here the example can be earthquake or flood happened after the balance sheet. And also proposed dividend you need to give effect after the balance sheet. So I can even call proposed dividend here. So the proposed dividend you will only give in the next year. So these are a couple of examples. There may be many other examples in our material we can discuss. Thank you very much.